right, so we're joined here today by Jeremy Harper, Director of Investments at Entrepreneur Roundtable Accelerator, a leading accelerator based off New York. To date, ERA alumni companies have raised more than $1 billion and collectively exceeded $6 billion in market capitalization. So thank you for joining us and welcome again, Jeremy.
Thanks so much, Dennis. Great to be here. Thanks for having me.
Thank you. So before we start, can you talk about a bit of how you got into venture capital and how's your experience so far?
Yeah, definitely. Well, my experience has been pretty good so far. I've been doing this for about 10 years. So I would have hoped if my experience wasn't good, I would have made a change by now. And how I got into it, I've known for many years that I was interested in this. I think I've always been an admirer of folks that have the guts to start a company and really take control of their careers in a pretty cool way. There's something about it that kind of goes against the system as well, like taking a job at an established company. There's something kind of inspiring to me about shunning all of that and starting your own company. So I've always been attracted by the concept of entrepreneurship and saw myself as like fitting into that ecosystem somewhere. As a kid, I grew up in the UK and they had a show there called Dragon's Den, which I think has become Shark Tank in the US. I think it's Dragon's Den in Canada as well. And I think that kind of garnered some interest from me as well in it. So to be honest, I've known from a young age that I wanted to be in and around entrepreneurs in some capacity. It wound up being in the form of, investing in them and helping them through an accelerator program as well, which is, probably the deepest way to engage as an investor in companies to really kind of get hands-on with folks. And the benefit of that is I get to work with these folks every day. They're coming into our space. And more recently now, we can run a hybrid approach. And it's inspiring to see them all here and doing their thing, and I'm grateful, to know that I can help a little piece of that if I can.
So you always admired sort of the rebellious aspect of entrepreneurs and how they're going against large institutions.
Definitely.
Do you think there is a bit of similarities between a successful entrepreneur and a successful investor?
Interesting. Well, it's funny. I haven't thought about that. I can definitely talk about what I think makes a successful entrepreneur and what I think makes a successful investor. In terms of like what the overlap would be, I mean, like anything else, you have to have a passion for what you do. That's incredibly important. It's even more important probably as a founder, but I think very important characteristic as an investor too. You want to be there for your portfolio companies. And I think portfolio companies and founders can really tell when you care. And I think they can tell between investors who really do and versus those that maybe do a bit less. And so I think that's a key characteristic for any of this. I think you need to share, sure. I think that, the rebelliousness, I think it needs to be a bit more innate for an entrepreneur, whereas an investor, I think it's more about looking at it from a bit of a higher level and trying to analyze whether or not this is the right area to rebel in and what the right, what the best entry point for that is, etc. So I guess there's some overlap there, but I don't, just broadly speaking, when I think about like the key characteristics of an entrepreneur, I mean, of course, passion for what you're doing is one of them. You need to be driven. It's going to be, very, very difficult. Most startups fail as well. And so you need to be cognizant of that. I think confidence is a critical one for entrepreneurs. We can get more into this, but a few key characteristics there. Should we keep talking about that, or?
So you've mentioned passion, and
Yeah.
I think that this is right. Entrepreneurs need to be passionate about the problem that they're solving. They need to be, you've mentioned confidence. So entrepreneurs need to be extremely confident about how the market will look like in 5 years, in 10 years, in 15 years, and it will be drastically different. What are ERA's passion? Where do you guys, where do you guys see, what are the verticals that are booming? What are the verticals of interest for ERA?
Verticals of interest. So yeah, I mean, I think there are areas, there are always going to be areas that are quote unquote like hotter from a fundraising perspective in terms of like areas attracting larger amounts of funding or commanding, higher multiples and things like that. ERA is a generalist tech investor. So we invest in really just the absolute best founders we can find that are operating in large venture fundable markets. Our thesis is, and we're not afraid to invest very early either. Our thesis is if we can invest in the best people in interesting large markets, that with our help, something interesting will happen. It often isn't like exactly the idea that folks come in with, but that's our kind of general bet we're making every time. In terms of like, I mean, some hotter, I mean, since the pandemic, healthcare has been, receiving a ton of funding. I'd say that's a hotter area right now. Recently, we're investing more and more in gaming as well, and kind of broader space related to it. I think that's receiving a lot of funding as well. In our most recent cohort, we have 2 gaming startups. We just had demo day yesterday, and one of them's already, raised their pre-seed round already. So yeah, those would be 2 areas that I think are particularly hot right now.
So healthcare and gaming, and you've mentioned, obviously ERA, aside from the investment, provides a lot of support to these young companies, and I think that's why that explains sort of the success that ERA has had over the past year. It's the valuations and some of the equity that was raised from the companies. What type of support, can you maybe give us an example of some of the support that you provide to young entrepreneurs? Sometimes, these entrepreneurs are first-time entrepreneurs, very deep expertise in a certain field. What do you think they're lacking in their team, and how can ERA help?
Yeah, and I think it's an astute question. A lot of folks are going through this for the first time, and I think you're spot on. And a lot of the reason folks will jump into an entrepreneurial path is exactly what you said. They'll have some kind of expertise or knowledge of a specific market. They'll see an opportunity there and have the drive to go after it, the conviction to go after it, which doesn't necessarily mean that they have the experience of the nitty gritty of actually starting a company, setting up an entity, like finding investors, hiring people, and building and launching a brand new product to market. Doesn't those are not necessarily a given. So when we think of the help we offer, and this kind of goes back to why do we even exist? When ERA started, we looked at the landscape of investors out there, and basically what's available to founders. And we noticed that, and this is 10 years ago, and the landscape has evolved a little bit since, but we noticed that the investors positioned to deliver the most help were actually some of the later stage investors who had large platforms, who had full-time people working to help their portfolio companies with introductions or help with hiring or whatever it might be, which is fantastic. But what we saw was that on the entrepreneur side, the moment that they need the most help is actually before they're receiving money from those kind of investors. They're before that, earlier than that. And so we saw a little bit of a gap there where we think entrepreneurs need the most help early, yet a lot of investors at the time who invest at the early stages would be angel investors or maybe like a very small fund or something like that, but folks who don't have the same kind of resources that a larger fund would have. So could we come up with a structure that delivers a whole bunch of resources, but also invests at the early stage, and so can provide those resources at the moment we think the entrepreneurs need it the most? So that was kind of the thesis behind it. So to your question, like, where do they need help? From our experience, we think they need help with, really it could be anything. Different founders have different levels of expertise with this stuff. Some and more of our founders are serial entrepreneurs who have done this before, and so they're gonna have some knowledge about this already. But the areas I think are key to help with at this stage are fundraising strategy, hiring strategy, and how to build out your team the best, marketing and go to market. Related to that is setting up an institutionalized sales process, particularly for B2B SaaS companies, which makes up a large part of our portfolio. So helping to institutionalize that process. And then beyond that, the kind of softer skills to kind of help with there. I think we try to develop our entrepreneurs' kind of communication skills a lot in terms of how they pitch the business, and also their confidence that they pitch it with. I think by getting into a program like this, that hopefully gives them some measure of confidence, and it's something we try and instill throughout the program. They need, the conviction they, obviously have because they've quit their job and dove into this 2 feet. Needs to shine through when they're talking to investors or partners or folks to hire. And so I think we try and instill a lot of that in them as well. So yeah, happy to dive into any more of those, but that would be my answer.
I think so. A lot of the early entrepreneurs, obviously early on in their journey, they know about a problem, and they often have a hypothesis on how to solve that problem. But yet, as you go through the market iterations, you often have to go through pivots, right? How do you want to solve a problem? I think the bigger picture never changes, but how do you manage these pivots? I think it's very hard as a previous entrepreneur to know, is it me who's not doing a certain process correctly, or did I not find the right product market fit? An example that we'd like to always use is, I obviously I used to be in the B2B sales business, and would I be able to sell a platform like Salesforce, or is it the product that's the problem? So how does ERA help and help guide some of these startups to say, I think you should stop here. You guys need to pivot a little bit and find another way. You guys hit a wall. Yeah. How do you guys manage these type of ambiguities?
Well, I think 2 aspects of that. One is like, how do you measure it? And the other is like, how do you make the decision on it? And for the first part, I mean, you just got to look at the data. I mean, when it comes to like product usage and trying to understand, is it the product versus the process I'm going through to sell the product? You have to look at the engagement data, time on site, whatever usage, it depends on the specific product, but whatever usage metrics you have, we'll just need to look at that. Churn will tell you a lot as well. If folks aren't sticking around, or depending on your model, if you have a freemium and no one's converting, or whatever it might be, those would all be indicators that there's some kind of an issue with product market fit. Now, in terms of like the process itself, I think that, the product not quite being there could hamper your process as well. But there are other kind of funnel metrics that I think we'll look for if there's something wrong with how we're delivering this product to market. There are benchmarks for all of these sales funnels. We can certainly compare to other portfolio companies of ours as well to help understand that. But I think the difference would be looking at like how the product is used versus the funnel and the metrics associated with each stage of the funnel to get to a sale. There are other factors though, beyond those 2 as well that might play in. So it does get complex. There's other factors like, are we marketing to the right customer segment? Are we, pricing correctly? Are other factors as well. So it's a complex assessment. But look, ultimately, like, if we can't, figure, or if we identify that one of these is wrong, I think the tough part is understanding like when's the right moment to pull the plug and make a change, and how drastic does that change need to be. There's no generalized answer I can provide to that. But what I would say is we think of ourselves as a kind of sounding board here for all issues like that. So we had, and if that were to happen to one of our founders, Not only would we be talking about it with our investment team here at ERA, but we have a bank of 1,000 mentors that we probably pull from to connect them with someone who is specifically engaged in their space and can help provide a sense for, what they're seeing versus, what they should be seeing compared to, other folks in the industry. So I think we would take a kind of broad approach to helping with that. But you also have to be pragmatic with this stuff. Sometimes decisions are forced. There are other factors at play that kind of force your hand with decisions. There's funding and runway and stuff like that. And so all these decisions need to be taken in the context of that as well. It's tricky. It's a tricky one, Dennis. I don't think there's one formula to that. It's going to differ for each company, and it's one of the hardest things. But backing up to thinking about pivots as a whole, we really encourage that, and we actually really like when we've met founders who have already pivoted. We see it as a kind of flexibility of thought. We see it as a kind of evidence of them being adaptable. So we really like that, and we like that the founder is kind of clued into the idea of going after the most exciting, kind of lowest hanging fruit, ripe opportunity. And if they spot something else that's not what they're doing that looks better, we're not afraid to have our companies pivot from our standpoint, and we like it. We like it when they do sometimes. Yeah.
I think you're right in saying, for a founder, it's really one of the hardest thing is to really know where the problem is, right? You have a small team, relatively low experience in terms of running a whole company, and you're coming up with a whole new product, and you're constantly battling through different resource constraints. And I think this eventually leads to a very low success rate of startups. And I think it obviously leads to also VC firms, and especially early stage VC firm, to take what we call a shotgun approach and say, all right, I'm very much interested in a specific field, and I'd like to invest in 10, 20, 100 startups in the same field that really doesn't have much of a differentiation between these startups. What do you think about this approach? Do you think as a VC firm, it really should be that way, just to increase your chance of making it happen? Or do you think that the additional attention to the startups is the key factor to success?
Yeah, this is like one of the kind of fundamental things that early stage investors have to decide what their thesis is on. Look, our approach is we invest in a smaller number of companies, deliver outsized support for those companies, and really try to make every one of them a success. It won't work out that way, but we think we have a pretty high funding rate compared to market. That's not to say that other strategies for investing are not good. They're just different strategies, frankly. Like, you can have a different investment thesis. As we have grown over the years, we have been forced to contend with, how do we expand? And one of the obvious ways to expand that we have pushed back against is this idea of increasing the cohort size for companies that we do. So right now it's 10 to 15. It started out as 10. When we expanded to 10 to 15, that was a big deal for us that we did several years ago, and we haven't touched it since. And so we've kind of made the decision to not grow through that avenue, basically. So there are other things we're doing to grow our platform, but what I don't think you'll ever see from us is an ERA cohort size of 100, 200 companies or anything even close to that, frankly. We do think of ourselves as kind of like a family feel accelerator. We have a small, we have a small full-time staff that's been here. Many of us have been here for 5 or 10 years. The two founders are the same original founders that started ERA, which I think is pretty unique. And it's kind of become part of our culture to be a smaller family feel, kind of hands-on accelerator. So that's just kind of a decision we made. It works for us. I think it works for our companies. I think the companies that want to join us, want to feel that support from us and want to know that they can have, access to the partners when they need it, access to folks like myself or the mentors, and not have to compete with, too many other companies for those resources. But look, there are obviously very successful firms doing the complete opposite strategy as well. And that's fine. And, you commit to that strategy, you have, a larger number of investments and that can work too. This is kind of what we decided, and it winds up being, I think, a bit of a differentiator for us, which is good. So yeah, I don't know. Yeah, that's the kind of thing that you should also ask our entrepreneurs about, right? So, ask them what they think of it.
For sure. And I think you've mentioned about the growth and the long term for ERA. And, if you think that the investment thesis is, okay, we're going to focus on a handful of startups at any given time, where do you think the next phase of the growth is? I think a lot of successful companies or funds like ERA are also growing sort of vertically to say, okay, we're going to invest in later stage. What are your thoughts about the future of ERA?
That's what we're doing too. So we, so as we grow, so rather than increase the size of the cohorts, we are increasing the size of our follow-on funds. So our ability to write checks to our founders after they finish the accelerator program. And that's been a big part of our growth. I think it's helpful for our companies. One less investor they have to kind of meet and go through the meet and greet process for the first time with. So yeah, that's the main one. We also as an aside help. We have a separate programming arm now that helps other countries send their best startups and founders to us and to the US to learn a little bit about what it takes in to be successful in the US market here. And so that's separate to our main accelerator program. We call it ERA Global. We run these for foreign companies or foreign countries, looking to help out their best founders. So those are some areas that we've run in.
Interesting. I'd like to maybe talk next about your views on what makes an entrepreneur successful. I think, especially from a team perspective, some people say, obviously there are two theses. One, they say, oh, I don't care about the team. Just give me a very large market. And there are some people that are obviously focusing a lot on the team. And I think as young entrepreneurs who might or might not have work experience, what are your advices on building a team and what, in your view, are making a team successful?
Yeah, well, to your point about investors who might not focus on the team as much, for an early stage investor, I think that's a losing strategy. It's so much, the stage we're investing. When you think about, the traditional way of assessing an investment, look at the assets and value, et cetera. So much of that, and oftentimes close to 100% of that, is the asset of the team itself, the founders, at particularly the stage we're investing in, right? So I think that's critical. Now, what are the characteristics that make a good team? Yeah, I mean, we touched a little bit on this before, but just to dive in more, I mean, to go over it all, I think main things are, sense of confidence, a sense of drive, a sensible mix of skills among the founding team, and ideally like a history of working together, some kind of pre-existing relationship between the founders. Going through those, and start with the one I just mentioned, the history of relationship. We've just found over the years that that founders that tend to know each other beforehand, before starting the company, rather than are kind of like meeting for the first time and jumping into a company together, tend to correlate to better outcomes. So that one is kind of a proven one to us. When it comes to like a sensible mix of skills, I say that as a tech investor and in a lot of cases a software investor. It just benefits us if we can have at least the early stages of construction occur within the founding team. Resources are scarce at the early stage. You're only going to have so much money and so much ability to pay people to do things for you. And so we need to be able to incentivize people with the equity of the company, and that comes in the form of the founders. And so if we can have a good mix of skills on the founding team to be able to kind of cover the key initial pillars of the business, I think that's pretty critical. Not necessarily 100% necessary. There are plenty of success stories out there otherwise, but I think this is a big help. And then the other two I mentioned were kind of drive and confidence. I mean, we talked a little bit about these earlier, but the drive you have to do this will need to be kind of strong and enduring. It will take years to be successful in this at best. So a critical characteristic there. And then the confidence is one that just has to shine through, as we mentioned earlier, to investors, to partners, to folks to hire. So much of the early stage game of starting a company is about convincing others of what you're doing in any respect. And I think you could have a fantastic product and really good idea. If you're not able to convince anyone to work for you, or to convince anyone to jump on board from an investment standpoint, or anything like that, or even make the initial sales, you're not going to get anywhere. So that kind of speaks to executional competence as well.
So you've mentioned confidence, drive, and don't get married after a first date, basically.
Don't get married after a first date.
That's what our mentors used to say. So when you're building out a team, we have these mixers at the moment where, very excited two people are meeting and they say, okay, let's do a company together. But often, some of it's not very related to a lot of successful outcome.
Yeah. I mean, look, I'm open to the perfect match existing and immediately kicking off. I'm sure if I looked, we have probably a couple hundred active companies right now. I'm sure if I looked across those, we'd find some examples of teams that did, there's always exceptions and examples, but yeah, I mean, it just kind of makes sense, right? You're gonna have to be working with this person or people, every single waking hour of the day from now until your company dies or exits, which could be 10 years down the road. So, you might want to have an understanding with those folks before you jump in. But look, beggars can't be choosers.
What about on the other side? So I know a lot of folks are interested in VC and venture capital, and obviously it's a very hot field, exciting field. Yeah. What advice do you have to enter the industry and to succeed in that industry?
Yeah, I mean, the first thing I say is, like anything else, there's like the exciting stuff and the exciting portion of the job, which I think everyone sees because they get, there's like headlines on TechCrunch and all this kind of stuff. But like every job, there's like, the tip of the iceberg that goes above the surface that you can see, and then there's the invisible, like under the surface part. And so there is a lot of nitty gritty to being an investor. There's a lot of financial work, a lot of like legal stuff to understand and deal with. So you have to kind of be accepting that is part of it. It's not all just chit chatting with cool founders all day. But I think if you're interested in it, yeah, I think you need to have a real passion for working with really talented, driven people who are the founders. So I think that, I mean, for me, that's my driving passion to be here. And then just, gosh, it is competitive. So we see that when we put out job postings for our, the hires that we make on the ERA team, it's certainly competitive. I would say, if you're trying to break through, some kind of an angle to differentiate you will be key, whether it's like a particular focus on investments in a certain sector, or a certain business model, or whatever it might be. Things like that will help folks stand out. But yeah, it is quite a hot kind of job interest these days, isn't it? I wonder if stuff like Shark Tank has helped with that. But there we are.
Perhaps, and I think some of the the returns in the tech industry, especially in the recent years, I think has
well,
sort
folks
of
should
fueled that
realize
growth.
that the kind of returns that they see headlines about are not the norm. Most funds are not investing in, Uber's seed round and stuff like that, right? And I think a lot of funds will, there's a lot of things funds will do to get exciting logos on their portfolio page. That doesn't necessarily mean they were invested at a very early stage. But so yeah, it's not, most funds will not be able to pull off a return like that. Yeah, it's tough. Success is not guaranteed.
Maybe one last question. What are your views on SPACs? Has been a lot of IPOs that went through that route. Do you think it's an easier way, an easier route for companies that might not be ready or not willing to go through a regular IPO? Does that reduce the risk for VCs?
From the entrepreneur's standpoint, and I think from an early investor's standpoint, SPACs. We could talk a lot about the process, the process that SPACs go through, and whether or not that makes some sense for the SPAC investors themselves, and there's a lot of nitty gritty there. From the founder's perspective, and from what we've seen in our portfolio so far, SPACs are really just representing another liquidity channel for them. So where previously it was somewhat limited to traditional IPO or private sale, SPACs are now just another kind of path, related to IPO, obviously, to liquidity. So right now in market, it's definitely been helpful. One of our largest exits recently was a SPAC. It was a $1.4 billion SPAC. It was fantastic. There are certainly question marks about how SPACs work and how they've been kind of used in their more modern format. But from our founders' perspectives, I think it's I think it's benefiting them right now. It's providing another option.
Thank you so much again, Jeremy, for joining us. I think we learned a lot about the VCs, the entrepreneurs. I thought it was a very good chat, and I think on behalf of our viewers, we thank you very much for your time, Jeremy.
Thanks very much, Dan. It's been great. And for any of your viewers who might like to follow up, please feel free to make my contact details available. I'm happy to chat with anyone.
For sure. I'm sure a lot of them will apply to the next batch of ERA, the roundtables. And
applications are open right now.
Fantastic. Thank you again.
All right. Cheers, Dennis. Thank you.